Lines on the charts are closer than they appear.
Good day, everybody. It's Greg Schnell, and I am here with the weekly market review for September 28th, 2019. Lots to talk about here as we head into October. The market spooks seem to be popping up. Lots of things rolling over that shouldn't roll over just now. So that's a bit of a problem for us. To find my blogs, you can always head to StockCharts.com, articles tab, and then the drop-down menu on the right, and you can look for the Canadian Technician. Don't ignore this chart. And I wrote a big article there about reviewing marijuana as an industry group, so try and check that out this week. And then Chart Watchers every second week, so feel free to look at those. And soon I hope to have my website up and running, and I'll have some more content for you there. Okay, and please hit subscribe at the bottom if you'd like to receive any of those in your email. For contact information, you can always reach me, Greg S. at StockCharts.com, on Twitter at Schnell Investor, or you can head over to my website, gregschnell.com, and register there to get the introductory offer that I'll have for my new newsletter subscription package. I think you'll find it pretty enticing. Anyway, the agenda today, market breadth capitulates in a big way. So normally we have this nice big bounce off the lows and we rally up, and this time we literally just got started and it rolled over, and I was shocked that it just died, and this week it continued to fall down. So I'm very worried about where we're going here. This market's got me real concerned. We're so weak where we're sitting, and then to have it fail so quickly here really feels like it wants to just break down. U.S. dollars going higher. Commodities have a terrible week is probably the best way to describe that. Trend lines are threatened everywhere and in some cases broken. Looks like we don't have one more run. So back at the end of August, I said, it looks like we have one more run coming. I think it was August 28th edition. And here we sit roughly a month later, and we got nothing. It's all not working out for us. So big problem. Anyway, let's get over to the charts. Sorry about that. Okay, so by the way, that's my website. So you'll be able to go there and you can either write in just your email here, or you can write in name, phone number, email, and just a message that you're interested. That'd be great. And let's get into the charts. I'm going to start with breadth because it's breaking down and it's bothering me. So let's describe what's going on. I covered some of this off on Friday, so I don't want to spend a lot of time on these particular charts, but I want to spend more time on the bullish percent indexes because they're laying out the program. So first of all, the CompQ is threatening to break this upsloping trend line. This is off the 2018 lows, actually the early low in January there, and this is breaking down hard. And you can see that we've got for a moving average of the advanced decline line data, we're in negative territory already. And we tried to rally up and we stalled up here and rolled back over. So none of this is good. It's really not what we wanted to see. And so that's just to start off, that's the problem. For the net new highs minus new lows, what we're at is negative. We're negative 45 on the NASDAQ. So this is, again, we continue to fail to get up into the big bullish area like we did in 2016, 17. And we're just struggling here. So this is a big problem for us. For the advanced decline line on the New York Composite, it hasn't quite gone negative yet. It's marginally positive, and it's still just tracking sideways. Now this one, I like this one a lot. So it's performing better, but I'll show you on the bullish percent index is why I'm so worried. The Dow Jones net new highs, and what we see here is we're under this 100 again. It's just not enough to get us rocking and rolling, and so far we kind of got a head and shoulders top structure sitting there, so that's a bit of an issue. For the S&P 500, using the advanced decline percentage, what you can see is we're in negative territory and have been all week. And then looking at the actual cumulative index of the advanced decline. This is making lower highs, lower lows, so that's a problem for us. And the market is stalled here up near the top. Now, I think we have 3 weeks here that are going to be very difficult. We have this week that is waiting for it's the jobs data on Friday, which I don't expect to be a problem. But we have the first week of the month where we get all the PMI data and all that kind of stuff. Purchasing Managers Index data. So that should be an issue. Then we've got some earnings starting to come out with, I think we're going to start with JP Morgan now. So with that, we'll be expecting something out of there. Really want to watch how those banks behave on their earnings. And I don't think Jamie Dimon's going to deliver anything disappointing, but the real question is, does the market have the strength to bounce on the data? And then we have the week following, we have the Chinese contingent coming over, and it's roughly a year since the market was breaking down. Last year, it was kind of the end of September where things fell apart. So here we sit heading into China one more time, and if that's going to be a problem, we'll find out if this is where it all starts to roll over. So those couple of things are a bit of an issue. And then we actually have the response to the China news. So if the market's going to break down hard, or even if there was some sort of China news, does it sell the rally or does it continue on? So lots of uncertainty over the next few weeks. And I think it's not going to be as straightforward as we'd like, because I'm noticing a whole bunch of internal weakness. And that internal weakness, I think, is a real concern for us. So that's a huge problem. Okay. So now I just want to hit the next chart here. So for the Canadian market, we're in negative territory. And again, even with oil rallying, we couldn't get going. So here we are since the beginning of the year, and every rally's had lower advanced decline line data. So that's a big problem for us. And even though we broke to new highs, it's on very little momentum. So that's an issue, and it's rolled over pretty much right at this trend line. We saw the same sort of configuration back in 2015 as the charts rolled over. And then here is the high-low data for the Canadian market. And because we had some surging going on in some of the markets, it improved. But again, never really got going into this sort of big, big long rally, and we got stuck in this sideways involvement again. So another problem. For the high-low data, calculated the Alexander Elder Way, a 5-day running total. We're at 197, so still marginally positive, but not by much. Okay, McClellan oscillator rolling over at this 800 level again. We've seen this movie before happen back in here. Now, it doesn't mean everything is all over, but this one was a pretty good sell signal. This one, the first one, we just kind of wobbled in here. This one was a very good sell signal early 2018. We're in negative territory already. So I've got a lot of problems with the data here. The summation index, we are fired up here, and it looks like this last week we actually rolled over onto a downward candle already. The issue, just as we look left here, this is kind of how we behaved in all through 2018, couldn't get above it and then fell apart. We see the same sort of syndrome back in 2015 where we couldn't make much hay and then rolled down again. And late in 2011, before we had the big breakdown then, we also had the same sort of resistance layer. So all of these are starting to add up. NASDAQ, we also had a negative week here, and the chart still looks like it's in a big uptrend. So I get that. I really do. I think the concern I have is when we get into the bullish percent indexes, and we're going to hit those right away here. So here we have the bullish percent index, and what the problem here is we rolled over right at 51, and after being up at 52 last time, like this just keeps getting weaker. Every rally's weaker. And the problem with this one, my Schnell strength index has literally rolled over at a very young and early level, telling me that there's no rally strength here. So that one's bothering me a lot. We went from 53% of the stocks above their 200-day moving average already down to 43%. That's just going to make it very hard to get any sort of a rally going when we're so weak to begin with. The NASDAQ 100, so again, remember that we're right near all-time highs here, and we only have 54% of the stocks on a buy signal and 63% of them above their 200-day moving average. That's terrible for the large cap group. So for it to roll over under this 70 level, that was a problem. Looking at the New York Composite, again, I thought we were going to get this big rally, and we just came up and basically got back to these trend lines and have rolled over again. We're at 59% of the stocks above their 200-day moving average. So again, not a lot, but we continue to see this weak. Each peak is too low for a real big rally to get going, and that's kind of the concern. Looking at the S&P 500, look at where this one rolled over, right at 70%, 68% or whatever, rolling over down to 64% now. But we could go, the fact that even the S&P 500 is giving it up, not just the small caps, that's an issue. Here's the TSX, and we haven't really started to break down here. We're holding up, but we shot up to almost 72%, and we're down to 65% in 1 week. So a 10% drop in the percentage of stocks making new buy signals. So what that means is new sell signals. 10% of the stocks went on sell signals, even though we've hardly rolled over. So that's pretty sensitive. The bullish percent index for energy is shown here in the middle, and it's above its 50-day moving average. But you can see oil closed below its 50-day. The XLE is very close to closing at its 50-day. We want to see it bounce here. And then the oil services sector and the XOP both are below the 50-day moving average. So in general, energy's back on a sell signal. I actually thought we'd get lots more support, but not yet. Okay, the bullish percent index for oil rolling down quite hard here. I was expecting a nice big bounce, but this is already starting to make a lower histogram for the bullish percent for the energy stocks. That's a surprise. Gold, everything kind of fell out of bed here. So we've got the gold miner to gold ratio falling below the 50-day moving average. That's problematic. We have the gold miners below the 50-day moving average. We have the bullish percent index back below the 50-day moving average. And we have the price of gold closing pretty much on the 50-day, just a hair above. But you can see real important support here at this 140 level. So unless things get fired up in gold pretty quick, I think that's a problem. So the options expiration day and the Fed meeting were last week, and we've rolled down since then. That doesn't really surprise me, but so far it's been a gentle departure. Nothing really aggressive here since the Fed meeting, and we made the high the day after and have dribbled below. Our put-call ratio is getting back above this higher level here. Now it could reverse right away. That wouldn't be a big deal. But as you notice, back in May, it started to run up, and in August, again, it ran up. And if I open this up a little bit to see how it behaved in October, November, December, you can see that this was a pretty good place to be aware of. So anyway, the put call's near the signal line, let's call it that. So not as bullish as we'd like. Monthly performance here for the last, since the rally off the lows, we've already given half of it back. We were at up 4.2%, and we've been dropping since the Fed meeting. We're down at 2.5% now. So not great, just rolling backwards here. And looking at it on a big picture chart from the beginning of the year, you can just see rolling over here. And if we, just have a trend line on these price moves, all of a sudden we've broken it and again failed at a prior high, looking a bit like a head and shoulders top. But the data is coming in really light in the breadth department, as I mentioned, with some of the, at 50%. That's just not enough stocks to drive us higher. So here we have the S&P 500 rolling over, kind of stalling at the previous high and pulling back. It's still holding this 2950. I think if that level starts to break, we're going to go down here to this 2850 and at least see if we can get some strength. NASDAQ 100 has now broken this uptrend line off the 2009 or 2018 lows. And we're sitting here with the Russell, and it basically got up to resistance and rolled right back over. So far, still working its way down here after an inside week last week, pulling down, but near the bottom of this big push up here. So starting to look pretty weak. If we take out that one, I think you'll see more selling get added onto this party. The S&P 500, in terms of momentum, has rolled over already, so that's what I'm watching for. That's a bit of a problem here. And again, we've got this double top in price action that's a bit of a concern. NASDAQ Composite, you can see this head and shoulders structure pretty clearly, but it is now breaking down in relative strength, and I got another one that I'm more worried about. I'll show that chart to you in a second. In terms of distribution days, we had 1, 2, 3, 4. So they're starting to add up here where we're having higher volume on selling days. That's a bigger issue. We're still above zero, but not much above zero. Anyway, to me, it looks like the market wants to go lower here. There wasn't that IPO this week was a great example of just the market having no willingness to purchase. That one just fell apart. The WeWork one and the Endeavor one, and then the Peloton IPO didn't do very well. So all of those add up. Okay, so here's the 2016 trend line in relative strength, and we're starting to break it here, and that's just not good. When we broke it back in 2018, there was a smaller trend line in here. When we broke that, that was a clue that we just didn't have much structure. So we actually finished below this uptrend line, and as you can see on the PPO here, we've rolled over well under the signal line. We're making lower lows. It looks to me like the market is not thinking we get a deal done on China, but that is just my interpretation. So that would be a concern for me. I think everything kind of unravels if that happens because the global markets are weak and this kind of keeps holding us together. The New York Composite monthly, we're grinding sideways. This is a line chart. You can just see we're kind of up near those prior highs. But on the bar chart, we keep trading. We end up at the end of the month around this 13,000 level. So who'd be surprised we had a close once, twice, 3 times. This would be 4 times. And I wrote down here 3 of the last 4 months had closed at the same level. We're 4 out of 6. So really a surprise that we just can't break through this area. The Russell, there was a downtrend line coming off the September high of last year. We briefly got through it. I was pretty bullish that things were going to work out. What does it do? Fail immediately. So really having to reel in my optimism as the charts continue to break down and all of my breadth measurements and the Schnell Strength Index breaking down. So lots of things I don't like here. Starting to get a little bit worried. On the Russell, I wrote last 2 weeks ago that, or last week, I guess, that it would be important that it breaks out here. Well, look what it's doing. It's rolling over under zero. This is just a bearish situation that looks to me it wants to go lower. So not a whole bunch of good news there. Let's just quickly get through these. The TSX, while it broke out to all-time highs, it looks like it's given that back now. Momentum has rolled over. So we have a higher high in price and a lower high in momentum. A bit of a concern there. Again, these daily trend lines, when they broke, they were nice parts to be part of a rally, but we're already rolled over. So that's a bit of a cautionary tale. On the weekly chart, same thing, failed breakout at this point, come back. We're still holding above the breakout level, I guess, but it wasn't what we wanted to see after getting finally through a multi-year high there. And the the value line geometric index, where every stock is the same. You can see we're back below this 40-week moving average again, and this chop, I mentioned it last week, just keeps chopping in here. One of these days it'll give us a signal, it'll finally break out. But it's odd because it has turned up in terms of momentum, but yet we're back below it. So we're below an upsloping one, and there just aren't that, usually that's a pretty bullish place when they start to turn up, and it did that over the last couple of weeks. But again, I thought things were going to improve, and now we've made a lower high, and we're back below the 40-week moving average, so not bullish at all. The emerging markets, this chart is sketty. Halloween is written all over this thing. We got a downtrend here that we just can't get through. The full stochastic is rolling over on this weekly chart. We have a big uptrend off the 2015-2016 area. I've I didn't place it on this low because it doesn't, it's 1 point, but here we have 1, 2, 3, 4, 5, 6, 7, 8, 9 touches. To me, it looks like a better place for the trend line. And after falling below, trying to get above and failing again, it looks to me like we're going lower. PPO rolling over below zero, so I expect US dollar higher and all of these markets to start to break down. Shanghai Composite did exactly what we didn't want to see. Got just above 3,000 and then rolled back over. Closed near the low of the bar. It's still above its 10-week moving average, but you can see its momentum is rolling over at zero here. We saw this back in 2018. That was when the tariffs were first introduced and a big slide down. So not a lot of comfort here that this is going to improve quickly. So all adding up to me to suggest a lot of caution with this chart was actually pushing higher as the news got better on trade, and the later tweets in the week suggest that we got more problems ahead with potentially locking them out of the Chinese stocks out of the U.S. Stock markets. That's a big deal. So anyway, here's the Nikkei rolling over at prior resistance. Again, started to look good and then not really helpful. US dollar finished up near the top of the range. This is not quite its highest closing high. And again, this is the weekly chart, but we're just not getting the price action we need to see here for this to improve a lot. Anyway, we're stuck inside this wedge, and hopefully if we can break through that and one way or the other, but look at our momentum line. These two trend lines going back multiple years are just getting tighter and tighter and tighter. Now it looks like it wants to break to the upside. I just, every week's a guess. So it's gently working its way higher, but with no real momentum. This is the daily version, spiked up Wednesday, Thursday, Friday. Nothing really great, but again, turned up above zero here, so we'll see if it's finally going to start to have a big directional move. The UUP chart actually broke out above the prior high, so that's one of the reasons that people were talking about new highs in the dollar, but it all depends on what the weighting is, and this UUP tries to track the US dollar, but obviously a little bit different with it breaking out to a new high and the dollar not. SPX down here at the bottom, just trying to marry the two, but if this is going to break out to new highs, we also saw the dollar let go in August as it started to break out. So we'll just see what we get here when the dollar actually recoiled. That's when the market dropped, I guess. So perhaps there's a directional clue there. I'm just telling you, this dollar is wandering a little bit higher, and the stock market so far is a little bit lower, but the breadth is horrific for the stock market. The euro is in this big downsloping wedge here. Don't have an answer as to which direction it wants to break. Basically the momentum is the inverse of the US dollar, right? So here we are sitting in this corner. Do we turn and bounce out of here? These lines can't get much closer together, so we're about to find out. Nothing really new there. I was thinking when the dollar started to move that we'd get something, but at this point, the Swedish krona is still pushing down here, living in the bottom right-hand corner, suggesting the US or the euro going lower as well. British pound rolled over again, kind of at the level when Boris Johnson got in, so rallied briefly above it and then failed again, rolled over. Usually in terms of momentum, the British pound makes these complex bottoms that I've circled here. So we'll just keep watching to see if it needs another one of those. But we tried to get back above the level of the Boris Johnson election and failed, and have started to turn back down again. Looking at the Japanese yen, what we see here is a big downtrend line going on for 6 years. Briefly broke out, gold soared on the news. Now it's struggling, and even this week, look at the candle. We tested higher, close near the bottom of the bar, a lower close, so not that bullish. Still didn't take out last week's low, but momentum has rolled over to the downside again. So I'm expecting the yen to keep going lower, which I think pulls gold lower as well. Okay, Japanese stock market daily. Here we go. You can just see, worked its way lower for most of the week, finished with a opening lower and closing higher, but still below the prior day's close. So still don't think it's that bullish. Anyway, not getting any real indication of which way these want to move. This one so far appears to be stranded below the 65-day moving average. We'll see if that holds up. So all these currencies are coiled. The real question is, do they finally break out? They've been coiled for most of the year. And we just keep nitpicking here. You can see the Canadian dollar working back and forth here for 8 weeks in a row with no real trend change. And I've got crude oil here shown on this weekly chart. And of course, it closed 1 week and then shot up early on the next week and then finished back near the prior range here. So you don't even see that spike in crude on this weekly line chart. But the Canadian dollar momentum is rolling over close to zero here. Are we going back below zero or will we actually start to grind lower? That's a good question. We're about to find out. Anyway, sideways grinding on most of these currencies. Aussie dollar down in the bottom here with a 10-year low, barely above the August lows. So I want to get to the emerging market currencies, and what we see here, this one rolled over at a lower high and now is trying to hold around the 40-week moving average, or in this case, sorry, the 65-week moving average. Would like to see that hold. I've put the emerging market chart up here. Again, that trend line that I had drawn on the earlier version. If all of this is going to start to crack here, we're about to find out which direction, but it looks to me like it wants to go lower. So the emerging market currency and the EEM itself are both tracking each other, and this one putting in such a low high suggests to me we're ready to roll down on emerging markets again. Okay, LIBOR, nothing really new, drilling in the bottom right-hand corner. The 3-month this week just got smoked. I'll show you that in a second. HYG failed breakout here. So last week broke out, and then this week, first thing it did is pull back inside, not just lightly inside the prior high, but inside a couple of prior ranges and rolled back in. So wondering which direction this is ready to move. Momentum, if it's rolling over right near zero here and going back below its signal line, that would say risk off again. So watching closely to see which way that wants to go. 7 to 10 year bond was up this week. I still think the momentum is stretched. So now we'll see if it does go on to make a higher high. Do we make a lower high in momentum, and then that's what pulls it down? HYG outperforming the 10-year or the 7 to 10-year ETF. Not really. It's drifting into the bottom right corner. LQD corporate bonds, they had broken out. Now we'll just see if they bounce off support and keep heading higher, or if this is just a rollover zone where they break down. This is one of the highest waves in terms of momentum on the chart, going back for 10 or 15 years, 12 years, I guess. And you can see that the initial surge we got here, we just had that same sort of move. Now the question is, do we grind sideways for 6 to 9 months? Okay, the tip chart rolling over, and again tried to rally last week and then this week pull back. This is gold and West Texas crude on this chart. In general, they kind of all move together. So with commodities rolling over this week, it looks like these are coming back too. This is TLT, just the raw price shown on a weekly chart. And what we're looking at here is we've got this uptrend that's been going since last November. And now the real question is, do we have enough momentum to keep surging higher? I think this was kind of an exhaustion run, and now we're going to come up, make a lower high or similar high, and then roll over. So that's what I'm expecting, but there was some money showing up here, lots of volume this week on that chart. BlackRock Community Fund. This broke down last week and is now bouncing this week, and I used this to help me with direction on the 10-year. The fact that it bounced here, perhaps this run in the bonds isn't over, but you can just see we've been going sideways with no real momentum for the last part of this. While it's going up, the momentum is flat. That's not bad. That's okay. The real question is, does this start to roll down now? Do we start making lower lows in momentum? and that would probably be a better clue that things are starting to wrap up. Okay, the 10-year, this monthly chart, big monthly tweezers here where we got one down, one up, and we're in the middle of the range on the up one. Looking at it on a weekly basis, you can see we thrusted up and now we've pulled back a bit. Do we have enough momentum? So far, not according to the PPO trend line. We're still below it, so keep watching that and see if that finally breaks. 5-year hit this kind of resistance line in early September and now has pulled back quite a bit. So I'm continuing to watch that to see if there's any new direction there, but I'm not hopeful. US 2-year, there wasn't a lot here, but the one thing I do want to show you, look at this 3-month. This thing just plummeted this week. Big moves down all week. And so that doesn't look very good from a bullish perspective to me. So watching these charts quite closely, but I was surprised to see this continue to fall so hard. And that's the bond yield falling. The 30-year rallied a bit this week. Again, the momentum had rolled over here and was down touching the line. This is a weekly chart. Now, can it turn around and bounce off it again like it did last time and the time before? I don't know. Again, we got up to 3% here, and the big thrust we had back in late 87, we got up to 4, 5, 6%. So it was big, but there's a couple of other stops close to 4%. We'll see if we have that much thrust left in this. I'm just going to roll on just so we can speed up a bit. Let's get into the transports. There was nothing really solid there. Ground sideways for the most of the week. Finished near the lows. You'll see that on the weekly chart, the next one. But it was lower highs, lower lows kind of week and finishing on the lows. So that looks to me the direction. I do not like this PPO rolling over just below zero. Nothing good about that. So that's a big concern for me, suggesting possible weakness in the transports. Looking at the airlines again, sideways chop, nothing really here. Big outside bar with a higher high, a lower low, and close near the lows. Not bullish. On the weekly basis, a lower high, lower low, lower close, so tells us trend is probably down. And the full stochastic looks like it wants to roll over near zero or near 50% here. Usually we don't see that in the strong uptrends. For the railroads, they had a weak Friday. They had a strong Monday soaring up, and then actually that might have been Tuesday. So Monday here holding. Tuesday soared up and then ended up closing near the lows after that, wobbled a bit sideways, and then closed weak on Friday. So the railroad price action is horrific, not what we wanted to see. Again, adding pressure to the overall transports. They have already broken their relative strength uptrend, and again, they outperformed for 4 years. Something's changing on the railroads, so I'd be very cautious owning them. Try to make sure you know when you'd leave or how you'd protect it if you want to hold the position. Trucking started to break out in relative strength, made a new, might not have been a 1-year high. It was an 11-month high. I thought it was 1 year. And then lower high, lower low this week. So nothing that bullish going on, but it does look like a failed breakout at this point. Autos, pretty weak. They bounced for the last couple of days. I think Tesla had a good day on Friday. And with that, the autos have a nice hammer candle here. We're dipping low and then rallying back up, but nothing to really enjoy. Just trying to... it still made lower highs, lower lows. And here's the broker-dealer index. And this one's bothered me because it was one of the clues that I thought we had going for us for a breakout. And look at the launch rally we started to have. And then we literally got up to previous resistance and stalled and now closed near the lows of the week. It's just not good. Where are we at? Zero. How many charts have I said we're at? Zero or near zero, rolling over. That's just a bad place on the charts, and the breadth indicators are telling us the same thing. Okay, utilities keep pushing up higher. Those are big candles, and if they're going to keep going, It's probably given us a clue about which way the market wants to go. The industrials, after a failed breakout 2 weeks ago, just had a spinning top candle here. We still got a downtrend in momentum that's got to break if we're going to go anywhere. The next chart is the semiconductors. Again, a leading group. We don't want to see this chart break down. Look at this. This is an uptrend in relative strength here that started, I want to say June, July, and we're threatening it right now. This line pulled down hard on Friday. If this relative strength uptrend breaks, that's just a great place to be cautious. It's not the kind of thing we want to see. And again, we had this upsloping triple top, and now we've just continued to fall lower. If everything started to turn up here, that would be extremely bullish. I could live with that. I'm just telling you that so far everything has rolled over in terms of momentum a lot quicker than I expected. Okay, going with the commodities, I mentioned they got smoked. Look at this bar here. Big surge. This is obviously on the crude surge. Got right up near the top. That's that red downtrend line. And then closed in the middle of the range so far. We'll see what they do on Friday, but nothing really helpful there for commodities. On the weekly chart, big surge in crude last week. This week, continued lower low, lower high, lower close. And we had this big downtrend in momentum here that looked like we were going to break out on this popping crude. Well, it quickly handled that, and we're stalled here already. So that's a problem. The general commodity ETF, DBC, it's not particularly strong, but we're trying to hold an uptrend here. We're below the 200-day moving average. Not a lot to brag about there. Oil and natural gas. This oil chart's really interesting. After breaking out from this downtrend, failing, and obviously the intra-week went up higher, but failing, and now we're actually back above this, or back below this uptrend. It looks to me like we got a little bit of room to hang on here, but not a whole bunch. But natural gas rolled over as well. Really hard rollover, actually. So for the traders in there, that was hurtful. The heating oil trying to hold this broken trend line, but pulled back this week. Gasoline failed below the upsloping trend line and now failed at the moving average, the 10-week moving average. Okay, corn, okay, soybeans in the middle, okay, and wheat, okay, nothing really moving there. Gold and silver, again, rolling over, and I mentioned that they just seem to be a proxy with the yen and some of the bonds. So if gold's going to roll over here, we could probably expect the bonds are going to top out with it. Copper, this looks like it back below the 10-week, but just a sideways week or slightly down, not too much movement. And aluminum just sideways as well. Getting on to livestock, this is a big uptrend, and getting on to livestock, this uptrend, we broke it. We've come back up to test this line. Now we'll see if it rolls over here, if it's going to continue higher. Sugar, trying to break this 2-year downtrend line. Coffee rallying a little bit this week, but let's face it, that chart's ugly. Cocoa, a little bit higher this week, and cotton slightly higher. So the ag's a little bit better than the energies, that's for sure. The marijuana names just got thumped, and I wrote a big article on the StockCharts platform. Let me just go get that. Under articles, and if you just scroll down here, you'll find a title that says what smart marijuana investors need to know. And I'll let you go and read that article and just see if you agree. But the bottom line is they're breaking out to new 2-year lows. This trend's been underway for a while, and for most people, almost everybody who's invested in the marijuana space has probably got negative returns. There will be a few with positives, but not many. Coal, after a nice breakout, everything started to look so good, and literally the moment those trade talks failed, down these charts went again. So steel and coal both dropping. Lithium and Remix, same thing. Remix, when I say that, it's the Rare Earth Strategic Metals Fund. Anyway, the bottom line is these are all rolling over again. So just when I got my hopes up, wrongfully so. No need to go through these. Let's go to the energy sector. After that big shift in oil, we've got a little bit to look at here. Trying to hold above the 50-day moving average on the XLE. My big thing is this horizontal red line's been here for a while. That's where we rallied to and then failed right away. We're on negative momentum here, rolling over near the top. For the crack ETF, making higher highs, that's very bullish. Like to see that. It's been running up for the last 2 weeks, so pretty positive there. Looking at frac, the unconventional oil reserves, you can see that it's basically rolling down every day since the Saudi oil field attack. There was some volume showed up to try and buy it on Friday, just holding it stable. I want to keep watching that oil sector to see if we do start to get some basing, and then, we've had our initial thrust, everybody's forgot about it. Perhaps it starts to, make a higher low right here and starts to work out. If so, you probably want to be ready for that trade. So I'd just keep watching here as we get the inventory data coming in. Frac, again, it had broken the downtrend and then pulled back down and is now trying to hold above the 10-week again. But we still haven't broken this big downtrend in momentum, so we probably got a little bit more work to do. West Texas crude, this is a wiggly chart going back 3 or 4 years, but church spire here on that Saudi attack and falling down hard, closing right on the lows, right near the lows for the week after being up here to start it. So not great. Middle of the bar for Friday. Momentum has rolled over. We'll just see if we can get anything. I think this is probably a good week to see if crude can finally base. On the weekly chart basis, you can see this trend line situation. There's a few little stabs below it. There's a stab above it from the Saudi attack. Let's keep watching. PPO's below zero. If it fails again here, could move a lot lower. Looking at West Texas with the XOP, this is back below its 10-week moving average. I don't really like that. And there's an uptrend here for crude oil itself for the momentum line, and it looks close to breaking. So another trend line that's starting to break, much like my intro on the video suggests. Okay, natural gas, that was a big rollover, and look where it rolled over, right at this horizontal support and resistance layer. Briefly tried to go above and then failed. Not very bullish. Looking at natural gas ratios, they're all trending down, so that's probably all we need to discuss there. Getting over to the nuclear chart, nuclear power generation. This chart was rolling up here for the last 3 weeks and just gave it all back Thursday, Friday. Big push down, high volumes. Kind of what it looks like on the chart, but that's only 15,000 traded, so not much. Looking at the URA, which is the ETF for the uranium producers. Again, this downtrend is firmly established and we've rolled over once again. Looking at Cameco down here in the bottom, it's been trying to rally, stuck in this downtrend. It's just such a tough stock. It hasn't done anything for years, and every rally's been a couple of weeks. And anyway, it doesn't look like they're ready to roll yet. Copper held okay this week. It made a lower high, lower low, lower close, but it wasn't as bad as that sounds. It was pretty close within a penny of where we closed last week, but it was still lower. We'll keep watching to see if it gets any sort of enthusiasm on the trade news. So this is the bar chart of copper, and what we see here for the week, just kind of a doji on the week, no big deal, but right around the 10-week moving average after a failed breakout above it. If it can hold here, that would be great. What we want to see this do is just kind of this full stochastic, make a wave and restart and turn back higher. I'm concerned if it rolls over right here, we're probably going to take out all of these lows and we'd start to make new 5-year lows in copper. Or sorry, what would it be? 2.5-year lows in copper. That would be a problem. Okay, copper miners, they didn't have a good week either. They continued to head to the bottom right corner of the chart. Steel, Same sort of move that we saw. The momentum wave was trying to bounce off these lows and turn higher. Hasn't done that yet. It looked like it was going to, and then the news of the trade agreement maybe not going so well has slowed all of these commodity charts. Getting into gold itself, gold finished near the low of the week, not too bearish, but right around the 10-week moving average. You know, this PPO looks like it's rolling over at a relatively high level, and we had, the last 3 out of 5 have been selling weeks in gold, so I don't think we wanted to see high volume day red. That's a bit of a problem. Looking at gold on the daily chart, what we see here is a kind of a small head and shoulder structure. Nothing major, but it just seems to me like it's a little bit exhausted on its run to the upside. So we'll find out if it's got any more heartbeat. If it does, that'd be a nice trade to get on. But right now it looks like it's just consolidating and maybe pulling back a bit. For the GLD chart, the volume declined here, even though we had selling on the week. There wasn't a whole bunch of interest. So this is the volume profile that was taking off has now started to normalize. Still above the previous level of the moving average. What did we get? Actually, just right on the moving average this week in terms of volume. GDX, this one tried to go higher, closed near the lows, and still above last week's low, which is a little bit more bullish. But again, the close near the lows isn't that good. And we did get a sell signal on the PPO rolling over well above zero. The gold minor ratio compared to gold, this chart is getting weaker. So nothing I really like there. That one's a big problem. Moving down a little bit more here, GDX, you can just see the chop here, and this is the Canadian dollar, and they had been not a tight correlation, but just continuing to watch these metals and see how they do. This Canadian dollar, if it's going to start to break this 3-month uptrend, no big, but a little bit of an uptrend, we'll just watch and see if that gets pressured by oil and gold rolling over. Okay, silver, same thing. It stalled at prior highs. So it had a big intra-week spike, but settled around this 1850 level, and we closed near the lows this week, and so we're now making lower lows, lower highs. As we'll keep watching that and just see how that goes. So SLV on the daily, running up, and then pulling back hard. Right through this 50-day moving average, or right to the 50-day. We'll see if there's any bounce there, but it wasn't very good. SIL, the actual silver miners ETF, they've been chopping for 6 weeks, so they haven't really followed silver higher lately. Let me just go see. Lumber, this is an interesting chart. So this one just keeps getting squeezed. Higher high, higher low, but lower close. So not quite great. And our PPO is right at zero. If lumber is going to fail, this is probably where it fails, just as momentum returns to zero from downward. If it starts to break this uptrend, that would be a concern to me. So I'm watching things like OSB to see which way they want to go, and this wood chart is the same. Trying to hold above the broken down sloping trend line. If it's unable to do that, that would be the problem. It's below zero here in terms of momentum, so a rollover here would be bad. It did break out, so we now want to see this thing start to pop to the upside. So keep watching that one, see if there's a good trade there. Okay, I'm not going to work through most of these. Okay, let's just quickly look. Most of Europe, I'm shocked, but most of Europe is very close to the highs for the month. So up here, trying to hold in there. We'll see how they perform Monday just to wrap it up. But they look pretty good. We got a positive cross on the PPO and trying to head higher. This is a very bullish candle that opened higher, opened slightly lower, then pushed all the way down and closed right near the highs. Let's go to the French market. On the French market, you can see on the monthly chart, it's trying to break out to new all-time highs, and it did have, I think if it closes here, that's new closing highs that goes back 10 years. So that's pretty bullish. The real question is, can it hold here? You can see lower highs, lower lows in the momentum wave, so it's worth watching. Looking at the Swedish market, this one pushed up against the prior high, opened this week coming down, and then held mid-range from I'll call it the last 3 weeks, but below last week's close. So are we consolidating or starting to move down? I already talked about the Shanghai, so we'll keep moving on there. Looking about the Hang Seng, this uptrend has been broken. It looked like we were going to go back and try and test to get through it, and then we ended up closing near the lows on that bar. So that's really not a great place for us to finish up. The Nikkei, this one's just crazy. What we see here is the Nikkei is back above its 20-month moving average. That would be very bullish. It's a downsloping moving average, so I'm already in the bear camp, and now all of a sudden it starts to show up with a rally. We'll see where it closes on Monday, but in general, it's consolidating sideways. It looks like it's trying to break out to the upside. And again, so many of these charts are trying to break out to the upside. I'd be ready for the big reversal, but I got to tell you, all of my data just says it's too weak to do that. So we'll need something big like the China thrust, I think, to get us going. So this is the failed breakout on the weekly, where it got above new 3-month highs and then rallied up and then immediately gave back, and we made lower lows and lower highs. So not great compared to last week. The Aussie stock market living in the top corner way up here on the right hand side. That's the monthly chart. Here's the weekly. We're testing that prior high, and we have a little bit of lower momentum, which you always would as you pull back and then come back up again. But we saw the same thing in late fall 2018. We saw it in early spring 2018, where it was running up nicely, and then all of a sudden it made a lower high off the momentum and started to drop. So those things are really starting to wear on me. I'm not liking the price action at all. Already covered off the TSX, so we'll go down to the Brazilian market. It's trying to hold up near the highs. Can't argue with that. We'll just see how much strength it's got. The Russia market is this one. And what we see there is, again, bouncing, getting back up to the prior high, and then this week rolling over, so another one of those rollovers. The S&P on a monthly chart continuing to kind of press up in this area. So far we've had an inside month, haven't been able to break out. I don't think, actually, maybe we have just slightly. A higher high, higher low, and we're in the middle of the bar, so we'll just see where we end up on Monday. Okay, the weekly chart, it looks to me like it's rolling over, and again, my participation data says pretty thin here, so want to be cautious. The NASDAQ 100 actually closed below this trend line, the upslope off the 2018 lows, that December low, and rallied back up here. I could move this line down slightly, but the bottom line is we're right at it. We're checking it out, and we need to get through here. This is a pretty important level now that we've tested it 3 times, and this week wasn't very solid. It looks to me like this is a touch and go. What we want to see is it break right through, so this is kind of difficult that we didn't have that horsepower available to us. I think that's pretty much it. Maybe just the British market. The one thing I want to show on this chart is so far they've had an inside month, but let's look at the weekly. Very powerful, and again, all of the Europe charts still look pretty good. They're coming in with some stimulus from the central bank, so that's providing some optimism there. But we're trying to bounce off zero. This is usually a bullish place to get on board, so I wouldn't throw it away yet, but I'm struggling with how weak the U.S. market is, and hopefully we can get this all turned around and get running. I think that's about it. On some of the other websites I published about TAN and First Solar and them starting to follow oil higher. Well, what did they do? They literally plummeted right after I wrote that article. Just kind of what you see, but the the one point I want to make here, where is that First Solar? First Solar had a terrible outside week here that kind of took in 2 months of trading. That's not the price action we want. This full stochastic failing at 50, that is now a sell signal for me. So a failed breakout, and I'd be on my way and make sure that I don't buy that anytime soon. Okay, I've covered those off. I want to go back and I want to show you this Amazon chart. I've covered this off a few times for those that have followed, but here's an uptrend coming, February, March through the May low and then into August low, and now we're breaking down and we're below the 200-day moving average. That's not that big a deal. What is the bigger deal is that the 200-day moving average is flat, and now we're breaking down through it and we're breaking through the uptrend line all kind of at the same time. I think what it says to us is this isn't, for these big, large caps, they aren't holding up very well. And Apple's trying to hold in this range here. And we have to remember they have a big share buyback program going on, $75 billion. So they're definitely trying to hold it up there. I get that. And then we have Facebook, big uptrend here, but it's already broken it. Looking in on Google, it hasn't been able to go anywhere for 2 weeks, even though it's been trying. And then we have Netflix clearly down and out. I don't know if you want to buy it down here, trying to pick it up on some sort of technology change or technology gain, but it looks like damaged goods so far. And Microsoft is in this tight range with the big buyback, $40 billion, but it wasn't enough to push the stock out of the range for any period of time. Lastly, Adobe. And what we see on this Adobe chart, there's a downtrend here that it's been going on for 2 months. It briefly tried to rally up on Thursday, and then Friday gave it all back. So again, over and over and over, we see all of these charts getting hit. So I'm struggling to have a lot of, I'll call it wide recommendations. The one chart that I thought would actually fail this week was Tesla, and it actually had a good week. I guess I didn't type that right. What we see on this Tesla weekly chart is the full stochastic is trying to hold above 50. That's usually a very bullish place. Momentum is below zero, but rising. So as long as it keeps rising, that would be positive. Look at the nice volume that showed up here. That's the best volume in 2 months. Trying to push the stock back up, but it literally just got it back to last week's high. And last week was an inside week where we made a lower high but a higher low. This week we tested that on the top side, came all the way back down, tested a low level, and then shot back up and closed near the top. That all suggests pretty good price action, but I continue to be worried about the overall breadth of the market, and some of my other data work just is telling me that there's probably one more week from confirming that we're going to go down hard here, but that's the way it's trying to line up to me. So I'm looking at this, if we just take the S&P 500, or actually let's use the Dow just to be different. You can see just grinding lower. It wasn't a real flush or anything, but grinding lower, and perhaps we can get it going. But we did the same sort of thing in July, and then eventually it just let go. And we're heading into the that fall earnings period, and I think that would be something worth watching. On the weekly chart, again, our full stochastic momentum is rolling over, and our PPO momentum is starting to roll over. In this case, we already got a sell signal where it just barely dropped below the signal line. Add it all together, I think we got a really difficult place for the next couple of weeks, because even if the market pulled down hard, we've got China the week following, and do you want to be long or short anything before that meeting? So I don't know if we're just going to drift sideways here until we get some firm announcement out of that, but I would expect a weak announcement out of China pushes things down. I don't feel like the market is priced in a trade win here, so we should get a little bit of an opportunity to sell that. To buy that if it happens. Thanks, everybody. Have a good week. Good trading. Stay safe. It's rocky out there. Thanks. Bye-bye.